I'm finally back with a mortgage payoff update video. This is a lot. What is up, YouTube? It's your girl Rochelle and I'm back with another video. Thank you guys for tuning in, liking, sharing, and subscribing. You guys are thebomb.com. Now in today's video, I am finally here to do a mortgage payoff update video for you because I love sharing my journey and staying on budget and meeting all my money goals. And if that's something you want to do, then dive in, like, share, subscribe, all that good stuff. Get your Twitter fingers ready. I would love to hear your feedback on this video. Please comment below. Let me know what you liked about the video, if you learned something new, if you have something to add. If you want to fact check me, sure, come at me. But please, whatever you do, be kind, because this is hard to share. And I searched a ton of YouTube content in preparation for doing this video, and I'm not seeing a lot of real numbers. I'm going to be sharing real and actual numbers with you guys to show you what I have done since paying off the mortgage with my husband. So let's do this. So if you are new to my channel, I shared my journey of how we were able to become mortgage free on our first property, which is in Maryland. I use this right here. This is my home buying and mortgage payoff guide. It shares everything that you need to pay off your house and stay motivated and track your progress. I think the biggest takeaway I would love for you to leave with this video is to appreciate how far you have come, no matter if you have only shaved off $500 off of your principal. You did it, okay? And the other thing you want to think about is, do you want to pay off your home early? I have plenty of videos where I dove into that more deeply, and I will rehash some of that now that I know what I know. But I constantly feel like I'm in a world where I find out hacks or ways to be better with your money, and I'm always late to the game, and I'm always having to go back and fix things that I've done because I didn't know it was the wrong way to do them. So I am determined to stay on task with this video and give the content for the people who want to come in and get the facts straight away. So I have already started my new guide because you heard it here first. We have our HELOC. We were conditionally approved for our home equity line of credit. I'm going to go into more detail about what exactly that is. So you know the real tea, and you can decide if it's something you want to do. First off, let me tell you the details about this loan. So I'm going to open this up and I will throw it up on the screen. We'll go line by line. First off, we purchased our property back in 2007. We paid it off in full at a balance of $50,000 back in December 2021. There's a lot of things I would have done differently now that I know what I know, but I am still happy to be mortgage free. Well, I guess I'm not mortgage free anymore. Anyway, we took on a HELOC in January of 2023. Officially, this was a project that took tons of time. I mean, first off, what is a HELOC? Home equity line of credit. The type of HELOC we were approved for was an investment loan because it is now a rental property where we collect income, and that was very important to me that we got that type of HELOC. The definition of any type of HELOC, just an overall view, is it's a line of credit that is borrowed against the available equity of your home. So basically, you take the appraised value of your home, you minus off the mortgage, which is whatever you owe and what you pay every month in full, and then you're left with your available balance of what your line of credit could possibly be. Now, they don't give you 100% of that. I have watched videos where some people were able to do that, but most banks like Bank of America, all those type of places, will let you borrow up to 80 to 85% of your home. We chose to use a credit union, not because we wanted to, for a couple different reasons. I'll give you the main two. One being, we used a credit union to pay off our first mortgage loan, and secondly, no one else would approve us. And that is a whole nother story that I will dive into over time. So basically, we chose to borrow 2/3 or 66% of our home value. We picked a nice round number of $100,000 since I did a $100,000 debt confession video for you guys almost a year ago, and I'll be coming back with an update on that now that we've made progress here. The sole purpose of us taking out this HELOC was different from other content creators here on YouTube. Most of the time you see them pulling equity from a home to purchase a new property. My husband and I, we still are battling that out. I am not sold on the whole process of being a homeowner. I feel like it's very cost ineffective. We were blessed to have a property where we could buy it, purchase it from family, as you see pictured, and it's a lot. It's just a lot to keep up with, and I don't know. My time is my money. My money is my money, but my time is my money. Okay, so basically we purchased the house $50,000 back in 07, interest rate 7%, 30-year loan, 1,000+ square footage, small townhome, 3-bedroom, 1.5 bath in an urban neighborhood. We bought the home from my husband's parents. It was his childhood home that he grew up in. Our monthly minimum payment was $322.67 a month. That did not include the principal. That was the principal amount. There was also interest and escrow tacked on, so our payments were averaged about $600 a month, which still was beautiful. And now we reside in Hawaii, and so this is considered an out-of-state property for us. More on that. So for the HELOC, now that we've paid all that off, we are now inside of our draw period. So we have a line of credit for $100,000 with a $0 initial advance, a $1 minimum advance, and 2 periods. The first period is the draw period. This is when you can spend as much as you want of that $100,000 for up to 20 years. Then the next period, that period will close in the year 2043 for us, and it will open up the repayment period, which is another 20 years. So we will have up until 2063 to pay this off in full. Feels like a mortgage yet? This is a mortgage on steroids, meaning that you have got to get it right or they can take your house. Let me be more specific. It's a joke, insider. We have a maturity date of February 1st, 2063. Here's the options. If we don't pay these people their $100,000 back in full, including interest, we will have to apply to refinance for the mortgage, which they have the right to approve or decline, or they can take my house. Yeah, it's serious. So you really want to make sure that the HELOC you're at the right mental stage to be able to attack this and get it done so that you don't have to worry about your house getting took. Our home value at the time that we purchased it for $50,000 back in 07 was about 100, not at the time, but over time it grew to about 140, 150,000, and it stands about that right now. We were in our 20s when we purchased it. We're now in our late 30s. Now that we're taking on this HELOC to hopefully become debt free. That is our goal. That's all we care about. Pay off stuff at a lower interest rate so we can get out of debt. We have consumer debt. A lot of people, I get a lot of questions asking, why did you pay off your house before you paid off your consumer debt? Let me catch you up. If you're new here, we had consumer debt. It was all of our college debt, all that previous stuff. We got out of debt, became debt free in our late 20s, and then we paid off our house, and then we got into more debt. Life be lifing, you know. If I'm sensitive and sounding like I'm in my feelings right now, I am. But I want to share this with you. I want to share this journey because I'm hoping that it inspires somebody else to pay off some debt today. Alrighty, so back when we purchased the house the first time, it was about, that mortgage came to about 20% of our income. Now that we're older, it amounts to about less than 10% of our income, meaning that the HELOC payment each month, we anticipate, we don't know yet, but we anticipate it to be about 8 to 10% of our income. So we really want to feel comfortable paying this HELOC minimum payment so we know our house is not getting taken. I mean, this is our baby. It's a source of income for us. And it's nostalgic. It's the house my husband grew up in. So our credit scores tanked when we paid off our mortgage. One of the things that ticked me off the most, and it was something I just had to come to terms with. I fought the Credit Karma's TransUnion experience. I got all types of disputes, and they kept on calling our mortgage a line of credit as if it was a credit card. Having to explain what a mortgage loan is compared to credit card loan to customer service is just something I never thought I would have to do since they does this, right? But it's been crazy. So anyway, now that that's a rental property, I caught you guys all up on that. Let's talk about a couple more numbers. Basically, how it works. I have the paperwork right here. How it works is just a couple things before we talk about how we plan to pay this thing off. That's the good part, okay? We have to go over their rules, basically. Their agreement that they have given us, that we have signed and said, yes, this is what we agreed to. Whether we want to agree to it, we agree. The loan account balance refers to the sum of unpaid principal of loans plus unpaid but earned finance charges. The initial advance, which for us was $0, refers to the amount of money you accept as an advance, obviously. The minimum advance refers to the smallest amount of money we will advance per request. We did neither of those, so screw. And just know every HELOC is different. It's based on each person, so make sure that you're asking the right questions so you can make an informed decision. The draw period refers to the time during the plan that you may request advances and make regular payments as due. The repayment period refers to the time during the plan that you must repay your HELOC, and you cannot request further advances during that period. This agreement is subject to the laws of Maryland, where the house is, and any federal laws. Tax deductibility. This, I have, just also let me go and just state this for the one time. I like the credit union that we are using. They have been very helpful. They have adequate staff, adequate customer service to answer our questions. I'm probably going to hit them up in a couple of days and ask a few more questions. Like, it has been a journey, but it has been as seamless and as painless as possible. So for them to be the only contender who would be willing to roll the dice on us, being that we're out of state, we're like, we always got a special scenario, special circumstance. I am happy that it was them. Okay, how do you access this money? This is something that I could not find in a lot of videos. People were like, oh, just make a transfer. Yeah, but how? This is a line of credit. So this is like kind of like a home equity loan that you would get and you would transfer the money and use. But you have options. That's not the only way to access the money. When you request an advance, give us the exact amount you would like to have. Write a HELOC check for the amount, or cash a check at the branch, or transfer account to account, or use the credit card that we will send you. This is, I think we're going to get a Visa credit card. So if I wanted to go out and purchase something, or if I wanted to go out and, you know, make a purchase for our rental property, or have the property manager have access to those funds, that's important to me. Then, because we're not there, right? I still have, you know, some of that money earmarked for just in case money for the house. That is, and that we're going to get to that with the payoff. So that is the basics on how to access the money. Now, how do you pay it back? How do you pay it back? Because that was my biggest concern. Like, what's the easiest way? We're going for easy here. Because remember, with a traditional mortgage loan, a conventional one, as long as it's not too sketch, they usually will let you make as many payments as you want, and they will let you make, you know, principal only payments. Well, you cannot do that with a HELOC. A HELOC is an interest only upfront loan. So meaning they're going to get that money first. And then you can worry about the balance going down. So on the maturity date, which for us is February 2063, we have to pay the amount of any remaining balance. Then let's jump to the additional repayment terms. If your account balance on any payment due date is less than the minimum, you only have to pay the account balance. You can pay off all or part of what you owe at any time. However, so long as you owe any amount, you must continue to make your minimum monthly payments. That is what I like about this type of loan that we are working with this credit union for, because everyone did, in a lot of these videos that I was watching, they were not able, there was a few stipulations. I know one guy, he's only allowed to pay the minimum due for the first 20 years in the draw period. And then once that next 20 years opens up, which is the repayment period, or for some people, the repayment period and the draw period is only 10 years. Let's get that straight first. It depends, y'all. It depends. So the fact that we have 20 years to pay this back, I'm happy with that. 10 years would make me really nervous. It's possible, it's more than possible, but I like the numbers. I like the numbers. So just find out for you. Rounding rule, the minimum payment will be rounded down to the nearest dollar. Thought that was interesting. And it's fun fact, my husband, who normally would have been here, he loves to make whole dollar payments. Like, if you ever watch any of my budgets, I always round up to the next dollar, because we don't do change usually, because just an extra step for us. And we usually keep a buffer in our account. But I will be doing specific amounts from here on out because I want to make sure that my bills are the bills and blah, blah, blah. Okay, so security. This is not security for you, it's security for them. We have secured your obligations under this plan by taking a security interest in your property, meaning you must maintain property insurance for the life of the loan. You may buy property insurance from anyone you want who is acceptable to us. That's another question you want to ask. So I didn't have to make any changes to the insurance that I already use. I didn't have to go out shopping, go look for something else. I could just continue business as usual. That was just another box checked. Joint account. If more than one person is on this agreement, the same applies to both of y'all. And I thought it was quite interesting. I actually called Tanisha, who is like one of my YouTube mentor sister friends, because she is on a journey to pay down her home sooner than later, in her words. And one of the things that we always talked about is we want to be transparent and open and honest with our audience because we want to share our journey to see if there's somebody else experiencing it the same way we are. And one of the things that I did not like, this is just like rare, and it was just them protecting themselves. They had these contingency plans, behind the scene weird interview questions that they were asking, like, what if you and your husband break up? We need a plan as to how you would be able to afford this payment without him. And I was like, it's not that there's anything wrong with that. My husband and I have been married for almost 20 years, but still, I didn't like how I have a friend who went through this same process. I have plenty of a lot of people who I know who use HELOCs of all different races and backgrounds. That's all I'm gonna say. And they did not have to have those questions answered. So take that as you will. I don't know if this is something new that is happening or it's based on the credit union or bank that you use, whatever lender, but they spent a lot of time being concerned about how I would be able to afford this because I am self-employed. And I know that also made them nervous and actually added additional time for our approval. But I also been in the game and I have several different sources of income. So I found it very interesting that they would be like, oh, your husband's a W-2 employee? Phew, okay, we can rely on that. Versus someone like me who has 4 different sources of income and always has. I have the tax paperwork and everything. Take all of this for what you will. I'm just sharing how it went for me. Okay. Changing the terms of this agreement. They have the right to change whatever they want, whenever they want, and they can just slide you a note and be like, this is a reasonable change, and you already pre-agreed to it. So have fun with that. Just want you to know. Okay, additional charges. I'm going to jump to that because, you know, the money, the shmoney. We can come back to this. Let's talk about phase 1, which is why were we interested in the HELOC product? For one, I want to pay down debt as quickly as possible. And to do that, you have to jump to interest that is lower. Not, you know, it is what it is. But in order to say we are approved, we started this process back in October, y'all. October of last year. And we are just now at the finishing point because I really didn't want to make this video until money hit my account. Like I could see it and be like, all right, guys, this is for real. Here we go. So what had to happen between October and now? Settlement charges. Because to get money, you got to spend money, which I think is very interesting. Again, another feature that I appreciated from our credit union, they took all of this, almost all of this out in advance. Well, through the loan. So I didn't have to shell out money. But 2 things I did have to pay for. Number 1 was the appraisal. Okay, they asked for that appraisal on day 1, which they wasted no time. Okay, they said, do you authorize appraisal? Yeah, but I need to let the property manager know so she can make sure the tenant has, you know, enough notice. Next thing I know, the inspector's like, hey, I'm at your house. Is it a good time for me to come and inspect your home? I'm like, no. Well, anyway, my property manager is amazing, and honestly, so is my tenant, and opened the house right up next day for him to do the walkthrough. I don't know if it was the next day or day after, I don't know, but it was very quick, within 3 days. Full report. When I say this man looked at every single detail of our home, like I have pictures of everything I will ever need for insurance purposes. So, I mean, real talk, our landlord slash homeowners insurance ain't even go this hard. Their inspector ain't even go this hard. This guy was worth every penny. So $535 is what we had to pay him for him to do that. And I am so grateful. Like, I'm talking, he even looked at the water heater, the plumbing, the AC, the interior, the exterior, the roof. I guess he had a drone because he was giving me facts about the roof to the point we even had some work done. So that was hot. Next thing was a credit report, $11.46. We had to pay for both of those two things. The rest was deducted from the loan. The title settle slash escrow came to $135. I would love to know what that means. Our mortgage is paid in full. And I actually have a copy of the notarized title in our possession, and they could not use that. I don't know if they could not or they chose not to, but they were like blown away by the fact that our mortgage was paid off. Like, that was, when I tell you, that made them nervous. And they almost wanted to like renege on the loan. Like, they was like, oh, so you don't have a balance? Okay, like it was all that type of pause. And I'm like, that should give you confidence that I'm gonna pay you your money back. Don't you want your money back? Which I'm not gonna even go that route. Anyway, then I had to pay $190 for the title, lender's coverage. Again, I don't know what that means. Recording fee, $115, and then a recordation tax, which was $500. Total, $941.50 to obtain this loan. Whew. Okay. Let's move on to let's keep on rolling with the money. So $100,000, you would think, okay, they're going to give me a line of credit for the $100,000 minus the 941 or minus the 1, 2, 3, I don't know, minus the 941. So actually that comes to more than 941, but that I took off the 535 and 1146. First things first, we have a lot of debt. You can watch any of my videos. It is what it is. And so to make them feel comfortable, part of the arrangement was off top, we're going to pay 2 of your loans because we did like balance transfers onto a low interest credit card, but that was about to run out. So I was like, wait a minute, y'all, let's take that one. And so we had to pay $30,696.84 off top before we even had access to our loan. Now, pause. This is good for us because guess what? We were going to take the money and do that anyway. But imagine if you were someone trying to secure $100,000 to put down on your next property. Okay. So again, you really have to make sure that you want to use this loan for what you want to use it for. And just know that just because they're giving you $100,000, it doesn't mean you're getting every penny. All right. Then that brought our balance down to, because if you minus the settlement charges, the appraisal and the titles and recording fees, we actually were given $68,361.66 to use the way we wanted to. And that took about a week from the day of signing with the notary or the closing agent to actually seeing the line of credit in our, on our bank statements and stuff like that, or in our bank account. So $68,000 ready to use just like that. Just like that. It goes pretty quick. Okay, so now let's talk about the monthly payments. So technically we don't owe a monthly payment for at least 30 days. So I think March 1st I have to make a monthly payment. But so what they did do, which is another thing I love, is they gave a proposed monthly payment. So remember, a lot of what I'm going to say is just like maybes, and I'll tell you why in a minute. 10.5% is our interest rate that they chose for this proposed monthly payment, because in December, that must have been the prime rate that the Wall Street Journal posted on the first calendar day of the billing cycle, or first calendar date of December. So December 1st, they said interest prime rate was 10.5%. So that's what we got here. It's a 20-year loan, 480 months. That is a first lien, so the payment is estimated to be $1,000, which is 1% of the loan. 1% of $100,000 is $1,000, plus homeowners insurance, which would be $73.95, and property taxes, which would be $197.50 $1,259 for a total payment due of $1,271.54. Now, I already have questions. This is one of the reasons I'm going to be talking to someone. They're going to get back to me on why I have to include my homeowner's insurance and my property tax in the monthly payment, because I pay that already. And so remember, most people would have an escrow account, or most people would still have a mortgage, and so they would, that would make sense. But for us, we paid for that already for the year. Like, that's done. And so we're going to get more information on that. But just knowing that I only have to pay about $1,300 for this $100,000 loan just to keep it in good standing, I can live with that. I mean, let's look at what we pay already before this switch over. Monthly credit card payments, this does include extra that we send to our debt every month. On average, every month, my husband and I spend $2,500 up to $3,200 a month on consumer debt. The end of this video, I will go into the emotional side of things, which is basically what the debt is, who, what, where, and why. How the heck do you have so much debt? I will get there. That's for the people who really, knows the people. Y'all stay to the end. But these are the facts. And I based that off of an average interest rate of APR of 18 to 22%. Some credit cards are higher. That doesn't include annual fees. That doesn't include anything else they feel like charging me for. I'm so done with the credit cards that I have right now. I'm so done with them. Understand, these are not like the nice, cute credit cards that they offer nowadays. I have credit cards from like my college days and my first job days, and I wasn't interested in rolling it over to new credit cards. I'm going to get into that as I go, because just so you know, I am going to keep using credit cards, but not right now. We're going to use one credit card for all the things and one bank account for all the things that we cannot use from the HELOC. So just so we're clear, this HELOC is only going to be used for consumer debt with high interest rates. We will not be using it to pay off consumer debt with low interest rates. For example, our Tesla car payment is like less than 2% interest. We are keeping that where it is. We have shaved off $14,000 in the first 18 months by just paying the minimum on it every month. So once all of this debt is paid off, yes, we will then knock out tests. This also will not be used for consumer debt that we have that is interest-free for the first 2 years or whatever, because we are knocking that debt out also. Now, if we pay off all these other things first, then we will circle back to these. Okay. Hopefully I'm answering questions as you go. There's a video, because now we're about to dive into the pay down plan, which of course I'm always going to keep this stuff thrown up on the screen for you. How the heck are you going to pay off $100,000? How? So there's this guy here on YouTube, and I'm telling you, I would not have clicked on his video, because compared to some of the other thumbnails, they were so grabby and so high quality, very bright, very clickable is what we call it in the YouTube world. I teach a budget tuber course that you can buy to learn how to be a YouTuber. I'll keep all the details for that below. But anyway, I clicked on his video because I saw a whiteboard. This man had numbers behind him. Okay, it was just like math happening behind him. And I was like, that is what I need. I clicked on that video and my mind was blown. This man shows you how to pay off all of your HELOC debt as quickly as possible. And the way that he came up with the plan is insane. You guys have to click it. I'll put the link below. I'm Rochelle. This is a note to yourself. Put the link below. This man basically ran into this couple. I don't know if he knows them personally, but he met them and they started talking about money. And he happens to be someone you can tell is just good with numbers. And so they said, yeah, we're thinking about getting this HELOC, but we're kind of unsure. And if we had more of a plan, then maybe we would do it, because our goal is not to stay in debt forever. He came up with this plan, y'all, that I'm about to show y'all. I'm doing the lowdown version of this plan. Like he's going 100 with it. But us, we're gonna ease in. We're gonna ease in. Micah wants to go hard. But here we go. Basically, our pay down plan is this. We have a balance of $68,361.66 at the time that I'm filming this. We are actively using this HELOC to pay transfer balance. Basically, that's what we're calling it. We're not saying pay off debt, but we're using it to transfer. Our average income is $12,000 to $15,000 a month. And before people come from me, some of this is W-2 income, so it's already been taxed. The rest of it is me, so I'm self-employed, and I have these different sources of income that are never the same every month. I do not count my chickens before they hatch, but for the purposes of this pay down plan, we had to come up with some type of a number. Some months I make incredible sales from my website, RochelleAdamson.com. Other months I make more income on from our tenant as a rental property. It just depends. So that's why I said our range is $12,000 to $15,000. Our monthly expenses, this is just bills and expenses to live off of, everything except for food, comes to about $4,508. We still have debt of $1,606 per month because we actually didn't have enough left over in our $100,000 HELOC that we got approved for to pay all of our debt off. That is number one. That is the first rule of this guy's plan. In order for this guy's plan to work, you have to be able to just take a huge chunk of the HELOC and knock it out. We had to improvise, and so we're going to tweak the numbers. Anyway, if you take all of those things away, we are left with about $5,886 on up to $8,886 left in our bank account each month. That is what we are going to use to send to our HELOC, our savings, our sinking funds, and to live off of. What I mean by that is, this is our credit card. This is what we use for all of the bills, and everything will be auto paid from this account. If there's something that I can't attach to this HELOC, or if there's like a minimum or maximum transactions use, I will use the checking account that we have that is with the same credit union. But this is like, we're going super simple for this payoff. So we start with that balance, $68,361.66, and we take off top, we take off the HELOC. $56,813.71 is how much we have already used, at the time I'm recording this video. That leaves us with a balance of $11,547.95 to spend any way we like. So for this plan to start rolling, we would initially off top take $8,000 off. Take $8,000 to use for the month of February for our bills, our expenses, and a little extra to live off of. Basically, my husband wants to use this money in lieu of a checking account, in lieu of a savings account, an emergency fund, a sinking fund. If there's something that comes up that's due for the month, like for the month of February, our phone bill is due. We pay it once a year through Mint Mobile. It's $9.60 for 3 lines. And I paid mine already for the year. But yeah, for the other 3 lines, we're just going to use the HELOC to pay for that. And we'll get to that, because you're going to be like, oh my God, you're going to pay interest on the phone bill? Nope, nope, nope. Real talk, I probably would have used a credit card, but not now. That's the old me. That's the yesterday me. Now we're going to use that $8,000 that we have pulled from the line of credit, put it in our checking account, and live off of it. And so mentally, we have earmarked $8,000. That leaves us with a balance of $35,47.95. By February 15th, we need to put $5,000 of that back. From my income, my husband's income, we need to put $5,000 back to the line of credit. That will increase the balance back up to $85,47.95. By February 28th, we need to add another $5,000 bare minimum back to that line of credit to give us a new balance of $13,547.95. Do you see what we did there? Do you see what we did there? Our starting balance was $11,547.95, and now it would be $13,547.95. We have added $2,000 to our line of credit, meaning we don't have to worry about a minimum payment. Remember, the minimum payment is going to be $1,000 bare minimum, and we don't have to worry about that. We have doubled the payment. without even trying, just by living our life. So then if I happen to have a really good month in sales or additional clients or whatever, I have additional income, tax season is coming up, I'm just going to speak it. Yes, I'm getting a refund. Because I have to be positive. But that is what that money will go right inside of. Let's do one more month so you can see what I mean. March 1st, we take all of $8,000 out to cover our living expenses. We're going to live off of that $8,000. That drops it down to $55,47.95. But by March 15th, I need to put $5,000 back in there. That will bring the balance back up to $10,547.95. By March 31st, I need to add another $5,000, and it will come up to $15,547.95. So between now and April 1st, we will have put $4,000 back on the HELOC, bare minimum built-in payments. If we continue to do this for the month of April, it would increase to $17,547.95, meaning that we will have put an extra $6,000 back into the HELOC. If we continue to do this every month for the next 34 months, we will have paid in full our HELOC by November 2025. That's only 2 years. That's only 2 years. I got 20 years to draw, meaning I would have 18 more years to use this money the way that we want, and I haven't even touched my repayment period yet. That is what sold me on trying this. We want expeditious payback, okay? Expeditious. Let me know in the comments what you think about all this. It was a lot for me. I'm not gonna lie. I watched that video 37 times. Like, it's an interesting concept. You can't knock it. For all the people who are saying, you know, it's created this kind of divide in the world. You know, should you pay down your mortgage or should you get a HELOC? I'm the best person to try this out because I've done both. I've done both. Let me tell you, there's comfort in knowing I don't have a mortgage. Because remember, some people do a HELOC on top of a mortgage. So that means they're making their monthly mortgage payment, which we all are doing anyway. Like, I pay rent for the place that we rent right now in Hawaii. But I also don't have the mortgage at home. I would have had three things. I would have had the rent here, the mortgage in Maryland, and the HELOC. So now that I just have the one thing to worry about, I can live with that, and I'm really ready to go hard. So let's go back to the home buying guide and let's set up camp, because mission one is to prepare. Okay, I know we're already at the end of January, but we have done some things. We have done some things, and I need to catch you up. So first off is our home savings tracker. I have pulled all money from all of our different sinking funds and just kind of put them all in one place. That way, if something happens for one thing, I have lump sums to work from. And this is just to prep for what my husband wants to happen. I mean, I'm like 75% in. Micah is 10 toes down. He all in. I am going to leave myself money each month to do my cash stuffing so that I can control my spending. I'm going to be expense tracking like crazy. We're just going to be on our A game. So money saved, I just have it at $100 for the house. I don't even know yet what I want to allocate for the house. By the end of January, today is like the 29th or 30th. So by the time February 1st, February 5th comes around, I will earmark some money just for the house. Credit score right now, this is another question. My credit score tanked when we paid off the mortgage. My credit score has already jumped 22 points. So it had dropped down, tanked down to almost the 610s. I was 750. I was 750, 740, 730, and it dropped 80 points. Oh, just like that. And honestly, it was a mental game, because I was like, you know what? I deserve to be down here in the low 600s because I have a ton of debt. And we have to get out of this mindset where we think, well, me personally, when I say we, I mean my household, me and my household, or maybe just me. Maybe I'm just talking about me, where it's okay to have debt. To me, I've never been okay with having debt. It took me a while to get here, but debt is normalized. And I think that you can become numb. Oh, I'm jumping to the emotional part. Not emotional yet. Anyway, our credit score, my credit score jumped 22 points and it is now sitting in the high 650s. So that makes me feel better because I was expecting it to tank again because, you know, when you get your credit checked or, you know, whatever, you just kind of expect that. Now let's talk about the payoff tracker. I already made a $1,000 payment over the weekend, so our balance has dropped, which should drop by $1,000. I don't know. See, I don't want to say. We're gonna see what happens. It's still pending, so we will see what happens with this HELOC. We'll see if the balance changes. If the balance does what it's supposed to do, it will go to $55,813.71. I'm not for sure. We'll see. In my head, that's what makes sense. Or at least I know that I have contributed $1,000 back of the 50+ K that we have already taken. I have my payment breakdown ready to go so I can share with you how much interest we're going to pay month by month. I have my bill tracker set up because since this is a rental property, we got bills. We pay our property manager $1,800 a year, pest control $552 a year, legal $240 a year, property taxes $2,400 per year, landlord insurance about $645 per year, and ground rent. If you're from Maryland, you know, about $96 per year total. That means we're going to spend $5,733 per year just to have a property. To me, that sounds like a lot for a $50,000 house. I don't know, maybe I'm overthinking it. I feel like this is a free and clear home, paid off, and before I can even have someone living in it, I have to pay $5,733. Now, before you say, oh, you don't need to have a property manager if there's no tenant, state of Maryland and the rules and regulations that they have instituted in the middle of a pandemic is beyond me. It is insane, the new regulations that are required to have a rental property. Just to get approved and to stay in good standing, you better have somebody on your side double checking your work. Like, it's a licensing thing in Maryland. So in Baltimore City, I will say, Baltimore County has jumped on board. Also, I'm hearing based on, you know, feedback I'm getting from property managers and other owners. And so, you know, they want in. They see you making money and they want to get in too. And that is, again, proof that things can change. Just because you have this plan in your head of how things are going to go because of what you see happening right now, it doesn't mean it can't change in the future. So, pest control, that is for me. I mean, you know, some owners choose to have the tenant pay for that. I don't want the tenant to have to make that decision as to whether they need pest control or not. It's an urban neighborhood. We're going to have some pest control. Legal, you just want to have, you know, another resource for a business that you're running. You are running a business. If you have a tenant, you're running a business. You have a property manager. We have an LLC. We have a business. This is serious. We have a tax advisor. I didn't even add that on the bill tracker list. Landlord insurance is mandatory, and you know, to have an active license and be known as a rental property in Baltimore. So ground rent is just a thing about Baltimore, a thing about Maryland. You should look it up. It's very interesting. We don't own the land that we own our house on, and mess around and don't pay that ground rent, that $96 a year, and see what happens. I have seen people's houses taken. And that's forever. You can't buy it out. And just as a comp, I never thought of it as a bad thing. You know, somebody owns the land. I'm sure you could try and find out about buying it, but I can't imagine what they would try and say you had to pay. But versus here in Hawaii, just one random type of loan here is a leasehold. Well, I don't want to call it a loan because I'm about to talk about something I know very little about, but it's new to me, a new concept. And basically, leasehold means that you own the home and the land for the first set of years. Sometimes it's 20 years, 30 years, or 40 years. I don't know. Maybe I'll throw up a little thing on the screen, but then you don't. Then you don't. That's all I got. So it just state by state, city by city, zip code by zip code, maybe even. You got to do your research. I have my trackers ready. I do have some plans to make some upgrades to the home. I would like to get a backyard fence, a private fence. That way the tenant can have a nice outdoor space to enjoy without looking at neighbors or neighbors looking at them. I would like to replace the front door, all of that. But anyway, I made my first payoff contribution to the mortgage payoff challenge, and so we should see a difference of $1,000. I'll share that in the next video. All right, so why did I get back in debt? I think the question is not why, but how. First thing, depression, mental health, unstable. I got really down and out. And on top of being depressed, and I'm speaking for myself personally, not my family, I also experienced budget burnout. I mean, I was tracking numbers and I was walking around with a calculator, walking around with 2 calculators. I just burnt myself out. I was working. And one thing that I didn't realize is lifestyle creep is real. So the prices of things raised and subscriptions started adding up without me realizing. And I think I didn't realize, for one, because our income went up, but we did not give that new money a job. So, I mean, there were several things that were happening same time. And I'll go into more about that and like the emotional and what happened to how we got here in my debt confession video. The one thing I will say that I am proud about, and this is just a personal thing, this is a different type of debt. This is not debt that I accumulated because I went shopping. I went to Louis Vuitton. That was, ooh, the old me would have ran up a card in Louis Vuitton. Yeah, it's different now. So, you know, we had some medical events happen, some emergencies. We had a lot of life in episodes in 2022. And honestly, the major key to all of that is that we didn't have money in the bank saved to cover us. And so when people say use all your money, have a $1,000 emergency fund and put the rest all on your mortgage or all on your debt, I can no longer support that, because if the fact of the matter is, if I had money in 2022, I would have been able to cash flow almost every event that came up. And so I literally got depressed because I lost myself. Like, I saw myself just losing because I couldn't do things like I used to. I used to be able to knock out debt, pay off debt. In fact, Tanisha kind of referenced this in one of her recent videos where she said, this is proof I be watching, girl, even when I don't comment. Because I work now with my hands, so I can't comment all the time. But she basically was saying that she can see how people can get back into debt. I might be, you know, not paraphrasing it correctly, but what I took away from it was that you could have debt, pay off the debt, and get back into debt and slide back really easily without even realizing it, almost because it's a comfort thing. It's something you're used to having. You know what to do. You know you're supposed to pay it off. You get excited again about looking at your bank account and finding $1 to send toward debt. And that is something that I think might have happened. Like, I got bored. I got debt free and got bored, y'all. I got bored. Like, I can afford this. I don't have a mortgage. I can live this way. I don't have a mortgage. I lived somewhere where rent was way too high, you know? So lesson learned, all the lessons. And if you want to, you know, stay in tune to this journey, then definitely subscribe, definitely like the video, definitely comment, let me know what you thought. I know I was kind of all over the place, but I will be sharing more tips in my debt confession video. I will be, you know, okay, so let me just run down a quick list of things that come to mind when I think of someone who is today wanting to pay down their mortgage. Because you see, there's a sweet spot. We always think of the end goal, but there's wins along the way in paying down your mortgage. The first thing is that you can remove PMI. Once you pay down 20% of your mortgage loan, you can request that PMI, private mortgage insurance, be removed from your mortgage loan, which will automatically lower your mortgage every month and give you an increase in your bank account. Or you can continue to send that extra money to the mortgage as a principal payment. That is like, we got to start celebrating the wins as they happen. So this stuff is going to be so out of order that I'm about to say. Okay, so your mortgage is paid off. You've used the mortgage payoff guide. You need to ASAP Rocky, call your mortgage company, your homeowner's insurance company, and tell them to take that mortgage lien off. You don't even have to have the title yet. Go ahead and start having the conversation, start the paper trail, start the phone call trail, and say, listen, I want that off, because everything that happens in your home and on your property from the moment that title is done is no longer their concern. It's no longer the lender's concern, is what I mean by that. And what I mean is, I heard this rare example where someone had a tenant who had a bill, their trash bill. They received a fine. I'm sorry, they received a fine because their trash was in the street or something like that. And the tenant did not notify the owner or the property manager or whatever. Didn't happen. And they ended up, the lender found it. Came to a point where it went to collections, and the lender saw it on the person's credit. And I don't know how they ran the person's credit in the middle. I don't know. We don't know the full story. But all we know is the lender found out, and that didn't have to happen. And so even though I had no issues with my lender, I still removed them from the conversation immediately. Thank you for your service. And interesting question that you may have also that I did not say. We actually tried to apply for a HELOC with this same lender with all these years. I mean, I never gave them any trouble. No late payments, no issues, no nothing. They declined us expeditiously. How many times am I going to use that word in this video? It's a long one today. It's a long video. They just said no. They didn't give any details. They didn't. But the one thing that I thought was so funny is, to this day, I can open up my email and find an email from them saying, hey, let's sit down and talk. I want to be your financial advisor. I want you to take a regular loan from us. I want you to go get a car through us. I want you to, it's so crazy. But the minute I say HELOC, they're like, no. Set up your own escrow account. Once you pay off your mortgage, set up an account so that you have money to pull from to pay for anything that comes up for your property. Get a property manager. Consider that. Even if you live in the state, she has saved us so much money because she is inspecting. She is the middleman. She is talking to the tenant, making sure that they are happy with their living experience there. See, it's almost like an added amenity for your property, because you now have a tenant who has a resource that they can reach out to 24/7, and it don't have to be you. And it's not very expensive in the grand scheme. Register your property in the city or state that you live in, if that's a thing. Screen your tenants. Collect and budget your rent as income. Be proactive about your maintenance and your inspection schedule. Even though I have a property manager, I meet with her and I'm like, hey girl, what we got going on? We need to snake a drink. Keep it professional. This is things that I've learned in the past. Keep it professional. Don't mix business with pleasure. Keep a miscellaneous sinking fund of some kind, because things do come up. It's out of your control sometimes. Have an emergency fund. Plan for no rent months. I've been very fortunate. My tenants are amazing. And overall, I haven't had any major issues. But that's a thing. Somebody's bumping music. That's a thing that I see that could be a huge, huge hindrance for someone who still has a mortgage. Pay down, but don't pay off your mortgage. Oop, I said it. Pay it down, but don't pay it off. That's just me personally. I would get it down as low as possible and then decide if you're going to pay off the mortgage. If that makes any sense. My battery about to die. We already said to remove the P&I. Get your paperwork organized for your HELOC. If you are even thinking about a HELOC, call them. Call all of the options so that you can listen to what they all say and compare. Even my nose, I still ask them questions. I still ask them questions. Determine the type of HELOC, the terms, and the time it will take to pay it off. Consider your rent market comps to determine what is a good amount of rent to be charging versus a good tenant. I'm not going to lose my tenant over a $1,000 increase. I moved out. My previous renters, they went up $1,000 on the rent, and I said, see you later. The place is nice, but it ain't that nice. Pay your escrow bills like ground rent. Pay your escrow bills like they're regular bills. Pay it. Don't miss your payments. Avoid fines. Celebrate every win. I've gotten so many gifts. Oh, I'm supposed to have my mug right here. I've gotten so many gifts from friends and family. Would I buy again? Not right now. Not right now. My husband wants to, but I'm just not there yet. Yeah. I wish I had saved more money. That's all I have to say about my mortgage payoff update is. Are you updated? My goodness, that was a lot. That was stressful. But I'm so glad to share this with you because it's healing for me too. I just took y'all on a journey. Like, this video probably an hour long, but man, the stuff that I shared is stuff that happened over the span of like 15 to 18 months. You know what I mean? Anyway, thank you for tuning in. I'll see you in the next video. I will come back with another video update. But until then, peace, love, and budgets. This is just a test to one of the craziest videos I'm probably going to record this year.